Good evening. This is the Elliott wave update for the S&P 500 for Monday, February the 7th, 2022. Very quiet market today in terms of direction and strength. We basically stayed within the pattern that was set during Globex, and that's basically sideways with a slight higher high, lower low, higher high, lower low. So I've been really struggling with what this possibly could be. So this is what I'm coming up with. I continue to view the high at 45.86 as the completion point for the intermediate wave 2. Again, just jumping out to that hourly chart real quick, I can see that this level completed. Oh, I got to go out to the 4 hour, excuse me. We're just going to do a quick review of our 4 hour chart. Here we have the completion point for all the way up to a cycle fifth wave. I can go one above to a super cycle wave 3. Then we start to come off and as the development of the initial larger leg down to begin a super cycle degree wave 4 correction. So I've already counted out the first 5 waves down to confirm the highs here, and also to label that as intermediate wave 1. Then we had a beautiful ABC up, and that is intermediate wave 2. I'm going to go back down to the hourly chart. Here is that wave 2. Then it just starts to get, in my opinion, a little bit shaky as to what exactly is going on. I can count 5 waves down, although as sloppy as it is, to put in wave 1 of 3. Then I can count 3 waves up, which would tell me that that's wave 2 of 3. So if we are beginning to come off in a 3 of 3 move, as I suggested last night, that what we need to see is the market to begin to accelerate lower and start to break below 44, 45, and on down below 44.38, and then on down, as I have shown through the Fibonacci's on the way down. Now, what we got was a complete sideways move that looks to me like more of an expanding triangle, which, by the way, I've never seen in a wave 2 position. So it gets a little bit confusing. So I'm going to have to let this kind of play out. Now, all I believe it might be is that it's an ABC X ABC, and that actually doesn't even fit very well either. So there's several different variations, but I've got to let the market to kind of fill in some blanks. So how I need to leave this right now is we remain in the same challenging position where the market can rally up and finish what this then may have been A of this small wave 2 of 3. And then this is the B wave of that 2 of 3. And indeed, the interior B wave ended up being a triangle. And then it thrusted down for the C wave. So then this is wave A of 2 of 3. This is wave B of 2 of 3. And now we're going to do a finishing C wave up, which would suggest we're going to break back above 4,532.50, maybe getting up to 37, maybe getting up to 45.45. We'll do it in 5 waves, finish it, and then start that very, very steep decline that we're anticipating. Now, that would be my interpretation after the action today. Now, what we actually get, we have to remain totally open for. But the upside scenario would suggest we get another rally up, not even to this level, although it is possible, but I would not expect it. I would think it's going to come in less. As the market continues to wait, I'll wait till Friday where we got the CPI figures, because I think the market continues to attempt to digest that the Fed has already announced that they're going to do 7 adjustments to interest rates in this year, maybe even in the first half. And then in the January meeting, put it off until the March meeting. And so there's a lot of waffling around, a lot of what is being interpreted as a Fed weakness, et cetera, et cetera. But really the bottom line is that the market is attempting to prepare itself for higher interest rates and how that affects certain sectors and certain companies and how we should be allocating and trading. So essentially, we still have a lot of unknowns wrapped around what direction the market should be taking. So that's why we get into a confusing sideways position. We have to allow for the upside to continue. Again, I would not be expecting an upside move to break back above 45.86. I would be looking for it to possibly get above 45.32. And as I said, maybe 37, 45, maybe as high as 45.65. Now, that would still leave it as a wave 2 of 3. So then we'd still be expecting that 3 of 3 move to drive the market lower. So how I'm going to leave this, we have the potential, fairly strong potential at this point right now, for a continued move higher. It should be limited in its reach to these Fibonacci extensions, actually, for a C wave. Again, as a wave 2, which the whole pattern would be, waves 2 can come up and retrace nearly all of that second wave, be considered, okay, a market reversal. And again, this is on a smaller scale, but still, they're going to be deeming it that, okay, we're going up, and so they're going to all pile back in. And that may be the case, but then the expectations on an Elliott basis would be, once it's complete, that it begins a decline. Now, here is the kicker that we've now seen again today. Each day, the market finishes off in that last half hour with a fairly solid sell. Here we have it again. And we're into that last half hour, and it was a very solid sell, down to new lows, actually, for today's session. What happens as soon as that is done, they step in, they buy it right back up. So again, kind of putting a confusing touch to what we're attempting to interpret and work for what we can expect tomorrow. So I need to leave it as this, that I right now would be looking for continued upside. If indeed we don't get that, then what I am going to interpret that is that this is wave 1 of 3, wave 2 of 3, wave 1 of 3 of 3, wave 2 of 3 of 3. So again, this gets confusing, but it's just showing you the subdivisions. So we would still be within that larger third wave. And this is the kickoff to starting that additional stronger acceleration that I'm looking for to the downside to really announce that 3 of 3 move. And whether or not they bought it back up makes no difference. If we start in Globex and they just come in and start selling it again, that's going to give more strength to the fact that we're still likely in that 3 of 3 move. And now we're going to begin to decline more strongly, starting to break below these support lines. So here again, we did come back down. We broke below the 50. We broke below the 50, excuse me, we broke below the 50 and then the 200. So on this move down in that last half hour, we broke the 50, the 20, and the 200. They came back and they closed it for the day after hours here back at that hourly 200. So we got both sides and they're really in conflict here. I think because the traders who maybe want to remain bullish or want to see the market higher know that if it remains below that 200, it draws more selling in. Getting it back above that 200 will bring the buyers back in. So we've got this dichotomy going, and that's what's really creating the problem. How do you want to trade that? We need to just continue to follow the price action as best we can. There were a lot of points today where it was a little bit more difficult, but if you held on to where the market was headed, you were able to trade each bar, hourly bar, and even on the intra-hour moves, they were fast, they were sharp, they were not, they were all over the board. So it wasn't the easiest trading day, even though volatility seemed to contract, it remained. Because then you got these moves, which were profitable if you were able to catch them and stay in. So not as easy a trading day. I'm looking for that to the easiness of the trade to come back in. And that would be via that we drop into that 3 of 3 move, which is going to be very much more directional. And we'll get down to those levels that we were discussing. So upside scenario, we break back above the 200. We break back above the 20. We break back above the 50. And we start heading up, getting back above 45.32, which is a good 50 points from where we are. Is the S&P capable of doing that in a day? Yes, absolutely, 100%. We can actually see it get up and finish this whole thing tomorrow and still be within the realm of reality. We've seen those strengthened moves before. Now, if it doesn't, and it just comes in and we start to come down, then I'm going to count that as this is the 2 of 3 of that third. So again, here's 1 of 3, 2 of 3. Now, if we're beginning in that third wave and the 2 is complete here, then this is 1 of 3 of 3. So I know you got to, that's how I show that it is extending within. So this is how we form these extensions. And when we get into that 3 of 3 of 3 move, it is going to be vicious and it's going to be very strong down, if that's what's going to happen. So when you start to see that, then you're going to know that's what we're in. And this, breaking these levels would not be a difficult thing. And quite often it's associated with a news or something fundamental that happens within the marketplace. There's the next support. We have 45.40, 44.45, and then we have 43.58. Essentially, what we'd be looking for is for the market to eventually come down. Let me see if I can open this up again and break not only below, but break below wave 1, which is sitting at 44.38, and start to really head towards 42.17, which would be 618, and that would be almost a minimum. Okay, so for tomorrow, we may sit in a box again. That's what we did basically all day today. And that would suggest that we still are going to go up and finish this wave, this smaller wave 2. So we have that. A continued downside, then we know we're picking back up in that 3 of 3 move. So I'm going to leave it. Continue to trade smart. Continue to use the moving averages. They really are very revealing and help us guide the trades and do provide that extra push when we see them break the 50, the 20, and the 200. You know you're going to start pushing, and they did. It stopped and they came all the way back, but it continued to push inside that move. All right, that's where I'm going to leave it. The next update will be on Tuesday, the 8th.